Please test it on camera.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Maulana Muhammad Malo and I belong to the Social Welfare Division of the Jamiatul Ulama South Africa. Under this arm of the organization, we try our level best to assist the impoverished downtrodden, be it with shelter for women, for widows, for food hampers, cooked meals, regular social grants throughout the year, and so much more. It gives me great pleasure to welcome all our participants this evening to the first of a series of Zakaah webinars, where muftis from our Fatwa department will share their wealth of knowledge for the broader good of the community. With a pandemic on our hands, I am sure you all will agree with me that these are uncertain times. As a result, we could not afford the privilege of having all our presenters as envisaged. However, we are fortunate to have at least one who will acquaint us with the laws of Zakaah. Mufti Muhammed Haffejee is our presenter for this evening. He manages the economics and finance desk within the Darul Ifta. In terms of his background, after successfully memorizing the Quran in Madrasa Islamia Binoni, Mufti Muhammad went on to pursue his alim fadil at Darul Karachi under the tutelage of Justice Mufti Muhammad Taqi Uthmani. Mufti Muhammad holds a BA Honours in Semitic Languages and Culture from the University of Johannesburg and a BCom degree in Private Law and Economics from the University of South Africa. After being awarded a scholarship to pursue postgraduate studies in Islamic finance, Mufti Muhammad went on to successfully complete a Master of Science degree in Islamic finance with specialization in research for Islamic finance using econometric techniques. He lectures Islamic commercial law at various higher learning institutions in South Africa and features regularly on media platforms. His exposure in managing the economics and finance desk of the Jamiatul Ulama South Africa has allowed him to gain more than a decade of experience in teaching and consulting businesses and cooperation on Sharia matters, finance and economics. Now, before I hand over to Mufti Muhammad, just a few housekeeping rules. Question and answers will be handled at the end of the presentation, or as called for by Mufti Muhammad. If you encounter any technical issues such as sound or visibility of slide, then kindly use the chat function. During the Q&A session, kindly use the raise hand function for ease of administration process on our side. That's it for me. I now hand you over to Mufti Muhammad.
Assalamu alaikum wa rahmatullahi wa barakatuh. Respected viewers and participants, before I proceed, allow me to commence this evening's webinar with the Masnoon Khutbah. Alhamdulillah, الحمد لله وكفى وسلام على عباده الذين اصطفى أما بعد قال الله تعالى في كتابه المبين والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا الصالحات وتواصوا بالحق وتواصوا بالصبر صدق الله العظيم رب اشرح لي صدري ويسر لي أمري وأحلل عقدة من لساني يفقه قولي سبحانك لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم. At the very outset, let me make it very clear that when we set out on this path to organize a webinar to equip our constituency with the basic knowledge of Zakaah so that individuals can successfully and independently calculate their dues and fulfill this obligation, foremost on our minds was the importance of simplifying the approach to calculation of Zakaah, more so in the first webinar of or within a series. Hence, we find ourselves at the first webinar referred to as the ABC or Zakaah adopting an ABC approach. The reason we call it an ABC approach is because Zakaah in essence is extremely simple. What complicates Zakaah is the way in which for a few decades now, many of us are leading our lives as a result of complicated lifestyles, complicated financial lifestyles. We find that Zakaah has suddenly become something that individuals find difficult to comprehend basic concepts and encounter difficulty in the actual physical calculation of their dues. So indeed, as we will see in the coming slides, Zakaah is as easy as ABC. However, we need to adopt an approach where, hopefully in this webinar, this ABC approach will not just be going to ABC, but also ensure that we have a rather comprehensive overview of Zakaah so that if this is the only webinar that we can manage to fit into our schedule, then hopefully it will hold us in good stead. What I've done is I've put out on display now our contact details. And the simple basic rationale for this is that we may not be able to encompass every scenario in relation to Zakaah. We may not be able to encounter or respond to every question. And as a result, we beg for forgiveness, but we set out our contact details at the very outset so that individuals can take note of this. And I will, inshallah, display the same slide towards the end for those who join a little later. But be that as it may, these are our details. And if you allow me to just take a minute or two, our Fatwa department comprises of 5 full-time muftis, each one specializing in a different area of an act of devotion. We have a dedicated mufti who manages the entire Fatwa department. And then we have a dedicated mufti who manages marital as well as social conflict within households and the fiqh of marriage and divorce. And then we have a dedicated mufti and a designated department within the Darul Ifta, the Fatwa department, that handles Islamic wills and estates. We have a dedicated division for the fiqh of commerce, which is a department I try to serve in my limited capacity. And then we also have a dedicated Shafi'i fiqh desk for followers of the Shafi'i madhab. Over the next few minutes, our webinar is divided into 2 sections. The first section was designated to be covered by one of our colleagues. However, due to unfortunate make it, and we make dua to Allah subhanahu wa ta'ala, Allah ta'ala afford us all protection from the pandemic, as well as any other challenge that we may encounter. So I'll present the first section on his behalf, and thereafter the second section, inshallah. So in section 1, we're basically like taking a look or setting the scene in terms of the economic rationale or behind zakah. And then the second part of section 1 deals with the benefits of zakah. In section 2, we deal with the overarching rules pertaining to zakah. And in this particular segment of section 2, what I intend to do is spell out just a few overarching rules, and under each one of these rules, we find that a plethora of sub-rules actually, or sub-related issues of zakah are actually applicable. So if we comprehend some of these overarching rules at the very outset, it makes it easier for us to apply the rule in any given situation or scenario. And then I take a look at the conditions for zakah, which is what we can refer to in common commercial terminology as the incidence of zakah. Who bears the duty to pay zakah? I wouldn't say a burden, because zakah is not a tax. Whereas in conventional commercial terms, when we talk of incidence of tax, we refer to who bears the burden of a tax. In the context of zakah, zakah is not a burden, and hence we refer to it as who bears the duty to fulfill the obligation of zakah. And then I take a look at the zakah equation and try to simplify, to break it down for individuals and our participants today. I also want to delve into understanding nisab, because for many of us who interact with zakah as Sharia scholars, for us these terminologies are basic terminologies, but we understand and fully appreciate that many of our individuals within our constituency find these Arabic terminologies difficult to comprehend. And if we can understand it fairly well, we will be in a better position to convey these teachings, basic teachings, to our children and our offspring when assisting them in calculating their zakah. And then I want to go into the aspect of determining an assessment date, because many individuals, by and large, I would go as far as saying up to 95% of individuals who contact us don't or are not familiar with how to determine an assessment date for calculation of zakah. We obviously have to look at zakatable assets, and I'll break down each of these assets into separate slides. We may not be able to go into each of these slides in detail. I must mention this at the very outset. What I would do is, if we are up against time, I would just briskly go through that particular slide, but then come back to it if there is any particular question. That I expect to take place, or I expect to encounter that particular problem in dealing with the zakatable assets. In terms of the non-zakatable assets, I will provide a list, and hopefully this list will be fairly comprehensive. I will try to take a look at current liabilities, as well as the recipients of zakah, and finally go into a general segment, inshallah. I hope that all participants can hear me and are fairly comfortable by now. If anyone is encountering any issue before we commence with section 1, you can insert that comment into a chat, and our technical support will try their level best to assist if possible. We are broadcasting from an area where power outages are common, as you've seen in the email that we circulated. We're just hoping and have our hopes high that we will not lose power. We have backup plans, and we hope that those backup plans will be sufficient for our purposes, inshallah. Commencing with section 1, here we're taking a look at the economic rationale and benefits of zakah itself. Okay, so we commence with section 1, the economic rationale and benefits of zakah. The very first bullet point states that every practice in Islam is geared towards developing a bond with Almighty Allah subhanahu wa ta'ala. We find that an act of maybe Hajj would develop a bond with with Allah subhanahu wa ta'ala in one way. The act of salah develops a bond with Allah in a different way. The act of zakah similarly develops a bond with an individual, with Allah subhanahu wa ta'ala in a different way. And based on this first bullet point that I make, ulama have written that the reason why Hajj is obligatory on an individual once in their lifetime, whereas Salah is obligatory on the individual 5 times a day, is because the objective of Hajj being obligatory once in one's lifetime is already achieved. When an individual visits the Haramain, and may Allah subhanahu wa ta'ala afford us all the opportunity time and time again, that individual's heart is already attached to the Haramain, and that attachment is very rarely severed in that individual's lifetime. So the objective is already achieved of bonding the individual with their maker and creator, whereas in Salah, the individual requires regular reminders and needs to connect and reconnect with Allah subhanahu wa ta'ala, and hence Salah is obligatory on the individual more than once in a day. Similarly, when it comes to Zakah, it is geared towards developing a bond between bondsman and Allah subhanahu wa ta'ala, and I'll address that particular bond in later points. As we understand, every injunction of the Sharia paves the way for facilitating our recognition of Almighty Allah in a different way, as I just said now. Zakah undoubtedly has tremendous potential to bring order to chaos in just about any economy and society. I'm sure you would agree with me that we live in a society where income inequality is so vast. South Africa fits among one of the most unequal countries in terms of income distribution globally. And we all know and are well aware of the situation of unemployment or of individuals. So indeed, Zakah has tremendous potential to, if discharged correctly, to bridge that gap and to eradicate chaos within an economy and society in general. Zakah, in the 4th bullet point, I make a point that Zakah guarantees every impoverished individual a baseline provision to propel them to break out of the cycle of poverty. Many of us in our individual lives, if we think back, we all were in that position where we needed someone to boost us. It could have been our parents, it could have been our sibling, it could have been a close relative, but this is what Zakah is meant to do to individuals who payers don't know and have absolutely no affiliation to. So when Zakah is discharged, there's greater potential for those impoverished individuals to break out of their cycle of poverty and eventually find their feet and move on in life and propel and rather succeed in life, just as many other individuals maybe succeed. Zakah is a liquidity injection. In economic parlance, we often hear about liquidity injections and different forms of stimulus within an economy. We hear about increasing or decreasing money supply and the role these play in managing an economy and macroeconomic, microeconomic policy. In the very same way, we hear about interest rates. Unfortunately, the system is geared in this way and developed and designed in this way, where interest rates permeate just about every aspect of our lives. So interest rates increasing and decreasing pretend as or play a role of some kind of stimulus in the economy, as experts assert. In the very same way, Zakah represents an economic stimulus, and the stimulus is in the form of individuals who pay their Zakah are basically desisting from hoarding, because the Sharia is averse to hoarding of wealth. The Sharia is saying, Allah subhanahu wa ta'ala in His infinite wisdom is saying, pay 2.5%, discharge 2.5% of your wealth, and whether you like it or not, you must give 2.5% of zakatable wealth away, so that even that little portion of your wealth would have been hoarded under ordinary circumstances. But Allah subhanahu wa ta'ala is saying, no, give it away, discharge it, so that it can play a role of an economic stimulus in an economy and enhance the economy and the health and fiber of the economy. In the last bullet point, I state that Zakah is basically a social contract between members of a community to ensure that each one looks out for the other. These days, unfortunately, we live in a situation where, in a community where even family members are breaking apart. The moral fabric of society is falling apart. And unfortunately, with the outbreak of the pandemic, things have become worse. And sometimes it is a great cause of concern that we are breaking away and drifting and further away from each other. Whereas, if we look at it within the context of Zakah, if zakah is adequately discharged by all and sundry who are duty bound to be paying zakah, those who are impoverished would know that there's someone that we can rely on. There's somewhere to go. There's a shoulder to lean on if we require any further assistance, or we need to come out of the poverty cycle that we are in. In terms of the benefits of zakah, there are particular benefits that accrue to the payer of zakah. The payer of zakah, basically, when that individual pays zakah, it establishes a superior level of subservience to Allah subhanahu wa ta'ala, in the sense that it is as if the individual is conveying an implicit message to Allah subhanahu wa ta'ala that everything that I have is not mine, it belongs to you, O Allah, and hence it is your command to discharge a portion of it for the less fortunate, and I will do so. So it is the way we represent subservience to Allah by bowing the most beautified portion of our body on the ground. In the very same way, we say to Allah subhanahu wa ta'ala that this wealth does not belong to me. It's not my profession. It's not my ability and capability that has afforded me this position of wealth. It all belongs to you, and as a result, I owe it to you. It's my duty. I'm not doing anyone a favor. This is why they say when giving sadaqah, when discharging zakah, or any other form of charity, it is not giving the poor what they need more than you do. It is giving the poor what you need more than they need. It is for your personal benefit. It is for your benefit in the eyes of Allah subhanahu wa ta'ala that you are giving away this discharging zakah. Fortunately, you have someone to discharge zakah. What if we were to be living in a time where, as prophesied by Nabi sallallahu alayhi wa sallam, that the Ummah will one day enjoy so much prosperity that there will be no one to give zakah. So we need to be indebted to individuals who actually prevail in our societies and can receive zakah, our zakah. Zakah is a gratitude for the blessing of wealth. Basically expressing our gratitude to Allah subhanahu wa ta'ala that everything that we have is not ours. It's a favor of Allah subhanahu wa ta'ala. We do not deserve it in the true sense of the word. And hence we discharge a portion of zakah as a means of gratitude for the wealth that Allah subhanahu wa ta'ala has granted us. Zakah purifies the soul from attachment to wealth. We know we are attached to the way we use our time. And in that context, Allah subhanahu wa ta'ala says, whatever you're doing, leave it when the adhan is called out, perform your salah. In the very same way, by and large, all of us, let's face it, we are human beings, we are social beings, we are economic beings, we are attached to our wealth. And zakah is a benefit to the individual by purifying that soul from attachment to that wealth. In the fourth bullet point, I state that zakah signifies the payer's empathy and compassion for the less fortunate. It is a sign that the individual realizes that while I can delay, I have every reason to delay the payment of my zakah, but I would not do so because there is someone who needs it, and someone requires it urgently, and this is why I need to execute this particular task on my shoulders. So it signifies that the payer is empathetic and realizes and sees things from the perspective of the poor, and is compassionate upon the poor. Zakah is a means to purify one's wealth and attract barakah. As I mentioned earlier on, we live in an economy where interest is the fabric of the economy. It's the fiber of the economy. You just can't escape it. No matter which individual tries to proclaim that he's free of interest, it's so difficult. And I won't go into the detail as time doesn't allow me to, but basically we discharge zakah and every other form of charity because in some way or the other our wealth is tainted. Maybe we spoke a lie, maybe we misrepresented our financial position in some way, and as a result, we landed on some wealth which is not lawfully ours, and hence we discharge zakah and every other form of charity to attract the barakah in our wealth, particularly our wealth. To the recipient, zakah alleviates poverty and facilitates the fulfillment of needs. Obviously, when that recipient receives something, some wealth, they are in a better position to fulfill their needs and to continue with their lives and continue to fulfill the needs of their near and dear ones. Zakah removes ill feelings that the poor entertain towards those who possess needs. If you live in a society or you live in a family where a sibling doesn't care of his brother or sister regarding their financial condition, whereas the one sibling is living a life, going abroad and showing everything is flaunted on a day-to-day basis, that impoverished sibling, obviously something goes through that heart. And this is the same feeling that the impoverished individuals go through when they see us flaunting our fleshy vehicles, our homes that we choose to reside in, or the way we choose to beautify our homes, whereas something less could be. So Zakah plays some role in alleviating those feelings in the hearts and minds of the poor and less fortunate. To the society, Zakah bridges the gap between the rich and the poor. This is a given that the more individuals discharge Zakah, that gap, if we discharge it appropriately, if we discharge Zakah correctly, then there will be greater potential to reduce income inequality and bridge the gap between the rich and poor. Zakah develops brotherhood and sisterhood between various strata of society. As I mentioned earlier on, impoverished individuals have feelings. Something goes through their heart when they observe others flaunting wealth. And this is why when Zakah is paid adequately and on time, then it breeds some kind of brotherhood and sisterhood between the various levels and strata within society. This brings me very much to the end of the segment on the benefits of Zakah. I would now like to proceed to section 2, which is an ABC approach to calculating Zakah. As I have been speaking for a few minutes, please allow me for a minute or two to just take a break and resume with section 2. Bismillahir Rahmanir Rahim. Let's commence with section 2. I hope that section 1 was informative and empowering, and also food for thought in terms of the overall benefits to us as individuals, payers of Zakah, recipients of Zakah, as well as to the broader society. If you notice one thing, in this layout of the presentation, we have not included a section on the virtues of calculating Zakah. The ahadith of Nabi sallallahu alayhi wasallam, the Quranic verses with reference to the calculation of Zakah, we've not included it. And the simple rationale for this is that we believe that individuals who have registered for this webinar are individuals who truly recognize their duty and their obligation, and as a result, they may be a little less in need of those virtues, although the relevance of those virtues will never cease. But for ease of reference and for in the interest of time, we have refrained from mentioning those. And what I'll do is I'll just refer you to a very good book and a publication written by Sheikh Muhammad Zakaria rahimahullah in his Fadail al-A'mal as well as his Fadail Sadaqat, where he has enumerated so many ahadiths, pages and pages, with reference to the benefits and the virtues of Zakah in terms of the Quran and the Sunnah of Nabi sallallahu alayhi wa sallam. Sister Miriam is passing a comment here, remarking, Jazakallah for the informative session. May we share these slides and notes with friends that did not attend this webinar. Inshallah, we will consider this. For now, we have a few webinars to go through. So this webinar will also be played out on Monday morning, inshallah, on Radio Islam, for the benefit of those, or the broader listenership of Radio Islam, inshallah. And if need be, if our technical support allows us to provide both the recording as well as the slides, these will be made available, inshallah. Anyway, let's commence with section 2. We have a lot of work to cover, and I'll try to go through it as swiftly as possible, inshallah. So we're taking a look at the ABC approach to calculation of Zakah. Let's start. I implore you to maybe just, there's some technical issue we're running into in terms of the display of the slides. So I encourage you to just maybe refrain from reading the coming points so that our concentration remains and that we can explore and fully understand the point being made as I speak. Basically, from an overarching rules point of view, we're looking at the first rule is the rule of the person being a natural person. From a zakah perspective, it is fundamental that the zakah recipient is a natural person. This is a rule on its own, and the reason why I say this, and I'll just give two examples of why this becomes a rule, because there are a few, at least there's two examples I can give where if you know this rule, then the individual scenario is already addressed. So the rule is that the recipient has to be a natural person. As a result of this, if you have a scenario where you're considering someone who passed away in your family and the estate is indebted. Now we encounter this question of, can you give zakah? Can someone in the family give zakah to this deceased estate to settle the debt? By virtue of knowing the rule that zakah can only be given to a natural person, zakah in this particular scenario that I'm citing now cannot be given to a deceased estate. There are other measures. The Sharia has other voting mechanisms to deal with an estate that is indebted. But zakah cannot be given to a deceased estate to settle the dues of that are being borne by that estate. Similarly, the second example, a person is tempted to give their zakah to a masjid. A masjid is a juristic entity. It is a work. It does not qualify as a natural person to receive zakah. So here are just two examples of knowing the rule being to our aid and our assistance, in the sense that we know that we cannot give zakah to these particular in these particular avenues. Then the second rule is the rule of deemed possession. Basically, what happens is, from a Sharia perspective, when it comes to zakah on an asset, the asset can either be possessed in person, which obviously necessitates zakah, or the asset is zakatable because of deemed possession. It's deemed as if you possess the item. So in this particular scenario, I'll just cite one example. Let's say we have a scenario where an individual voluntarily subscribed to a Sharia-compliant retirement annuity, for example. So we have a scenario where an individual voluntarily is contributing towards this retirement annuity, and even though this access to that fund is restricted from a rules point of view, zakah is still due simply because of, so to say, teaching the rule of deemed possession. There's voluntary entry into that retirement annuity, and as a result, it would attract zakah. I'll go into the detail of zakah pension funds a bit later. For now, I'm just giving the overarching rules. The third rule is the rule of ownership transfer, and so crucial in our community and the way in which our communities are discharging zakah. So one of the fundamental rules of discharging zakah and a valid discharge is that ownership must transfer from payer to payee, from the discharger of zakah to the recipient of zakah. Ownership must transfer. If ownership is not transferring to a particular individual, natural person, then we are breaching the rule of ownership transfer. So I'll give simple example here again. A person is tempted to use their zakah to purchase oxygenators. But the scenario we may run into is, will the oxygenator belong to a particular individual? If it's going to belong to a particular individual, then fine, well and good. But it's going to belong to a hospital or a hospice or a frail care center, then it's belonging to a legal entity. It's not belonging to a natural person. Ownership hasn't transferred from between two natural persons. And this is why the ownership, the rule of ownership transfer is what I refer to in terms of importance of discharging zakah. Then I go to the fourth bullet point, the rule of best interest of the poor. Basically, what the Sharia states, and the Fuqaha state, scholars of Islam state, that the best interest of the poor means that in any given scenario of predicament, let's call it a predicament of calculating zakah, if we are caught between two options, we would incline towards the option which is in the best interest of the poor. Whereas the other, although it fulfills the box or ticks the box in terms of paying zakah, but it's not in the best interest of the poor. So I'll give a simple example here again. We know that there's a huge disparity between the nisab of gold and the nisab of silver. If we buy, so many individuals these days are inclined towards the adoption of zakah, of utilizing gold as the nisab of zakah. But when it comes to applying the rule of best interest of the poor, we understand that if we use silver, there's a lower threshold, and as a result, more individuals will be paying zakah. Simply by virtue of knowing this rule, where we keep the best interest of the poor in mind, it allows us to make a decision between two options. Do we adopt the silver nisab or the gold nisab? So this is the reason, or one of the rules that we apply in terms of inclining towards the silver nisab. Then the second last bullet point is the rule of ownership and possession. If you see on the slide, and is highlighted and in bold. The reason why this rule basically signifies or means that an asset, for an asset to be subjected to zakah, it must be owned and possessed simultaneously. It must be together. It must be simultaneous. It cannot be that we only have ownership or we only have possession. This would already disqualify an asset from being subject to zakah if there is only one of these two criteria. And I'll give examples here. So we have a scenario where a person is employed and they are obligated to sign up for a pension. Here's a classic case where an individual owns the pension fund. It's in their name, for their accounts, but they do not possess it in the full sense of the word as outlined by the scholar of Islam. So the individual can't just simply go to a bank and withdraw some funds from it. So the individual may own the pension fund, but does not possess it. And this is why an occupational pension fund would not need to be subject to zakah until some level of reasonable access is granted to the fund. I hope that the example is a good enough illustration of the rule itself. The final rule I want to touch on, and this list, I must emphasize, is not exhaustive. It's just to give you an idea of, for us as practitioners on the back end, we apply particular rules to determine the outcome. The rule of zakah assessment date. In this regard, what I want to say is that many individuals tend to utilize the Gregorian date of zakah for the calculation of their zakah. This is, let me say, and I just want to play a bit cautiously with it. It's problematic because the lunar calendar is roughly 10 to 11 days shorter than the Gregorian calendar. As a result of repeated use of the Gregorian calendar over a period of 33 years, effectively, and I repeat, effectively, that individual is 1 year short of zakah. Who wants to be 1 year short of paying zakah after paying zakah for 3 years? So adopt the Islamic date as far as possible. And I'll go through how to determine that Islamic date, because that Islamic date is basically determined as the first year after possessing surplus zakatable wealth. I'll go through that in greater detail, inshallah, later on. I now want to proceed to the conditions for zakah. The first condition, or the conditions for paying zakah, or the incidence of zakah, is basically two categories. The conditions are either applicable to the payer or to the wealth itself. The payer has to be a Muslim, obviously, to accrue reward. That individual has to be a Muslim to be paying zakah. Reward is only accrued for any action placed if the person is Muslim. Adolescence, the person must be baligh and they must be baligh Islamically in the Hanafi school in order to subject their wealth to zakah. The position is slightly different in the Shafi'i method. The mental capacity of the individual is also a requirement in the Hanafi school, that the individual has to enjoy mental capacity in the sense that if the individual is, let's say, afflicted with some mental illness, they may possess a huge reserve of wealth, but it is a matter of compassion of the Sharia that the wealth of that indigent individual is exempt from zakah. This is a manifestation of the mercy of Allah subhanahu wa ta'ala. If an individual is mentally incapable, all their wealth is for them. Nothing belongs to Allah. Allah does not want a share belongs to that individual. In terms of the wealth has to be equal or exceed the nisab rate. And I'll go to the nisab rate in due course. I'm trying to just go a bit more swiftly because I see time is against us. And I truly appreciate that your time is also very important. The wealth, as I mentioned earlier on, must be in one's ownership and possession simultaneously. I already elaborated on this point of ownership. and possession simultaneously. As I mentioned earlier on, a lunar year must pass on that wealth before subjecting to zakah. Given that paying zakah on the Gregorian calendar is so widespread, so common, the Accounting and Auditing Organization for Islamic Financial Institutions have passed a resolution that if an individual, most types of business, is utilizing the Gregorian calendar to calculate zakah, then their wealth needs to be subjected to zakah at a rate of 2.577. And in the leap year, it will be 2.5775. This is basically a measure if the individual or business is constrained to utilize the Gregorian calendar. In terms of the zakah equation, this first bullet is as simple as a zakah equation you get. Really, dear listeners and participants, these images that you see here, don't be overwhelmed by it. The last time some of us may have seen these images in our children's textbook with assisting them with their homework, but it's far from complicated. We're basically looking at zakatable assets on the one hand. We're deducting particular liabilities. It's not all liabilities. There are particular quantities of liabilities that can be deducted. After deducting liabilities, we arrive at our net zakatable wealth. And that net zakatable wealth is then multiplied by 2.5% to calculate zakah. So this is as simple as the equation is. It's about putting your assets on one side, putting your liabilities on the other side, deducting liabilities from assets, and the result you get is what you multiply by 2.5%. And I hope that if any youth are tuned in, this would be a benefit to them if they are privy to zakah for the first time. In the second bullet, what I'm basically stating that is that if net, after doing this equation, taking your zakatable assets, deducting liabilities, and arriving in net zakatable wealth, if that net zakatable wealth is greater than or equal to nisab, then zakah would be payable, the obligation will be affected, and the individual will pay zakah. If the net zakatable wealth is less than the nisab, then no zakah will be payable on that individual's wealth. So I hope that this clarifies the zakah equation. If I recall correctly, this is the only slide I have in terms of the zakah equation. Maybe I'll just pause for a moment to elaborate a very important lesson of life in terms of this equation. It may look like a zakah equation, but it's a very important lesson of life to be derived from this equation. Essentially, what we're doing is we're saying to Allah subhanahu wa ta'ala that we've got all our wealth, but something belongs to so-and-so person, something belongs to another person. Let me first reserve the rights of that person. Let me first see to the rights of that individual. Thereafter, whatever is left of my wealth, I will fulfill the right of Allah subhanahu wa ta'ala. This equation speaks volumes in terms of mine and your approach to life. We need to be constantly engaged in trying to fulfill the rights of human beings before we fulfill the rights of Allah subhanahu wa ta'ala. And the very same lesson is derived in the way we behave throughout this pandemic. The wearing of masks, the adoption of precautionary measures is not primarily for us. It's because we care about the next person, because we want to protect the next person from us. We do not want to become the means of anyone contracting this virus. If we contract it, it's our own affliction that we deal with. But we do not want to become the means of others contracting this virus. And I won't labor on the point itself. But I hope that the point is clear in terms of the zakah equation demonstrating and conveying this lesson to us. In terms of nisab, let's move on now. Breaking down the nisab. I have a few slides dedicated to the nisab itself. Nisab is basically, in simple terms, as the first bullet states, it's a threshold to determine a wealth position, and it is stipulated by Nabi sallallahu alaihi wasallam. It's the Sharia method of saying whether a person is wealthy or not. This is the particular hadith in bullet number 2. If you have 200 dirhams and it has been saved for a year, then you are obliged to pay 5 dirhams of zakah, 2.5%. And there is no obligation of zakah on gold until you have 20 dinars. If you own 20 dinars and it has been saved for a year, half a dinar must be effectively 2.5%. So this is the hadith. It's authoritative, it's authentic, and based on this hadith, we discharge zakah. The nisab was basically based on gold and silver and not any other metal, simply because the monetary system during the time of Nabi Sallallahu Alaihi Wasallam was the era of the bimetallic standard. Obviously, over time, those of us who are privy to economic theory, there's been a gradual shift from the metals, underlying currency. But in the time of Nabi Sallallahu Alaihi Wasallam, suffice to say that the bimetallic standard was utilized. Bimetallic means that gold and silver were the predominant forms of currency that were invoked during the era of Nabi Sallallahu Alaihi Wasallam. These were mediums of exchange and these were stores of value, just to borrow the mainstream economic terminology. In the prophetic era, the nisab of gold was basically 20 dinars and silver was 200 dinars, thus resulting in a ratio of 1:10. In other words, 1 dinar would have equal buying power to 10 dirhams in the market. Essentially, what we're saying is that the actual nisab was identical. This is an important point. Many of us get confused and caught up in this whole discussion of the Sharia being so confusing between silver, gold, and what's the rationale? If you think about it in this context, this is now within this context. It essentially means that the nisab is only one, because the buying power of 1 dinar was equivalent to the buying power of 10 dirhams, which was silver coins. So essentially, we're talking about one nisab. It's not two nisabs. It's just two ways in which we arrive. It's like two sides of the same coin. In terms of rand equivalents, the nisab weights in gold calculate 20 dinars calculates to 87.48 grams within the Hanafi method. The Shafi method is slightly lower threshold in terms of gold. It's 85.50 if I recall correctly. Silver threshold is 612.36, the same within the Hanafi and Shafi method. In terms of rand equivalents, if you convert these gram values of gold and silver into rand terms, gold calculates to 73,524 rand. 22 cents. This is how much, if we were to be using the gold nisab, if anyone were to be paying zakat, they would have to have wealth equal to or exceeding this amount. Can you already see where this is going? Much less individuals would be paying zakat if gold would be nisab. Silver nisab is currently at 8,005 rand cents. That's based at rates that are extant on the 29th of March. Maybe I should just use this moment to highlight an important point in terms of nisab. It really occurs in I'll present three scenarios. The first two really occur, but I'll cite it because they are important more so in the case of women who may participate. If an individual, the first scenario is that if an individual possesses only gold as a zakat asset class, nothing else, no cash, no investments, nothing else, only gold. In that case, the individual would have to possess gold in excess of 87.48 grams of gold to be paying zakat. That's the first scenario. If that individual only possesses 40 grams of gold, there would be no zakat. Similarly, the second scenario, if an individual only possesses silver, then they would need to possess in excess of 612.36 grams of silver to be paying zakat. The third scenario is the most common scenario, where individuals possess small reserves of cash, small reserves of investment, small reserves of gold, small reserves of silver. In this scenario, what we do is what the Sharia rule is that the value of those pieces of wealth is clustered, and after clustering, we look at whether the wealth exceeds the nisab rate. I see a message that requesting me to speak a bit louder. I will try my best to speak a bit louder. On your side, if you can also just turn up the volume, I'm sure you have already, but I will try to speak as loud as I can, inshallah. So those are the three scenarios I needed to highlight in terms of the nisab and the rand equivalents. The final slide in terms of nisab. Many scholars are of the view that silver nisab should be used as the threshold to determine who should discharge the obligation of zakat. Their view is based on the rationale that by using silver as nisab, more individuals will pay zakat and in the process benefit the less fortunate. The nisab of gold should be used to determine who should discharge the obligation of zakat. Their view, which is also legitimate, is based on the rationale that the nisab of silver does not accurately differentiate between the wealthy and the needy. Between these two views, the former view is currently held by the global majority, while the latter view is gaining some traction as research emerges. And it should not come as a surprise. If gold is in due course adopted as the nisab, then it should not come as or should surprise us that the scholars are beginning to confuse us. This is to accommodate the fact that the Sharia is meant to last, to stand the test of time. It needs to stand the test of time till the day of Qiyamah. And for that to happen, particular changes need to occur within the realm of specific rules set out by the Sharia. So as long as the process of arriving at a new nisab is adopted, this is what we can expect to change. I see a request. The Jamiatul Ulama South Africa's official view is the adoption of the silver nisab in line with the global majority. Our research is also ongoing, and we have prepared a few small articles and papers on it, which are due to be released and circulated in appropriate forums. I now want to move on to determining an assessment date, because this is an important point. In terms of determining a Zakaah assessment date, let me begin by saying that the valuation date is established on the date when a person owns the nisab value of zakatable assets for the first time in their life. In other words, what I mean is, we are going to look at a particular point in our life when we were in excess of surplus zakatable wealth after deducting liabilities. 1 year on from that particular point, we are going to determine our position. If at both points, the beginning of our year and our end of the zakat year, we are in possession of surplus zakatable wealth, zakah will be payable on the total amount of wealth, not only the wealth which was in our possession for 12 months, it's the total amount. Even though there's a fluctuation in wealth during the year, everything in one's possession will need to be subjected to zakah, simply because at the beginning of the zakah year as well as the end of the zakah year, they were in possession of surplus zakatable wealth. The only time this rule breaks is when, during the course of the year, the individual had a zero balance of wealth. He lost everything. In that case, the zakah year recommences from the next moment when the individual possesses surplus zakatable wealth. What I'm going to do now is illustrate through the intermediary of 5 slides, demonstrate determining the zakah assessment date. And what I just said now in terms of the beginning of the zakah year and the end of the zakah year, where we're only looking at these 2 points, irrespective of the fluctuation of wealth throughout the year. Okay. One sister is requesting that we state the rule once again and a bit louder. I'll try my best. The rule is we look at the beginning of the zakah year and the end of the zakah year. If at both points we are in possession of surplus zakatable wealth after deducting liabilities, then irrespective of the fluctuation in our wealth throughout the year, at the end of our zakah year, we will take into account the total amount of zakatable wealth, not only the zakatable wealth that is with us for 12 months. So even though an individual received something, a large sum of money, a windfall, a day or two before their zakat date, it would have to be included in the zakat calculation, simply because the rule being met. The only time this rule breaks is when during the year that individual sustained a zero balance of their wealth. So the point will be made clearer, hopefully, in the slides, inshallah. So here's the first slide. The green bars represent our asset holding throughout the year. And the red line represents the fluctuation of nisab, which happens on a day-to-day basis. It fluctuates every day. On the x-axis, we're looking at the date, our time scale. We're looking at the 1st of Shaban 1441 as our zakat date. The first time this particular individual is possessing surplus zakatable wealth. It sees the wealth above the red line. And the end of the zakah year is the 1st of Shaban 1442. In this particular scenario, this individual would have to be paying zakat, even though some wealth, if you look at the second last bar on your right hand side, or commencing from the right side, the second last bar, that wealth was not in possession for 12 months, but it would still need to be subject Zakah simply refers on the beginning and the end. The individual was in possession of surplus zakatable wealth. Second scenario. Here we have a scenario where the individual commenced their year with wealth exceeding the nisab rate. They ended their year with wealth exceeding the nisab rate. And during the year, their wealth position was so volatile that they even went below the nisab rate, but they never experienced a zero balance in their wealth. In this particular scenario, zakah will also be payable. Zakah will remain payable even though this individual sustained such a volatile experience of wealth where their wealth went below the nisab. They would still be paying zakah. Third scenario. Here's an individual who initially started their year on the 1st of Shaban, a year previously. On the 1st of Shaban, 1440. It's 1 year earlier than what this graph is demonstrating. So they were in possession of zakatable wealth. 1441 came and they were not in possession of zakah. So effectively, this person's year, zakah year, is broken. And when they come to 1st of Shaban 1442, at the end of the year, the last bar, this individual, their year broke. So there's no zakah on the 1st of Shaban 1442. But consider this carefully. This individual on the 1st of Safar 1442, if you look at the graph, the middle bar, the 1st of Safar 1442, this individual suddenly came into possession of wealth which was exceeding the nisab rate. This individual's year will now be the 1st of Safar 1443, 1 year later, which is not represented on this graph. So in this case, zakah is payable 1 year later from the 1st of Safar 1443. Fourth scenario. In this case, the individual started their year below the nisab rate and ended their year below the nisab rate. And throughout the year, there just was no wealth exceeding the nisab rate. Sadly, this is the reality for many individuals. And may Allah subhanahu wa ta'ala protect us all. But in this case, zakah would not be payable on this particular individual. What we're saying is this individual's year was 1st of Shaban 1440. Every year it was the 1st of Shaban, but they just haven't had a year where they exceeded the nisab rate, and as a result, zakah is not paid. This is the fifth and final slide on assessment date, where we state that zakah in this case is not payable. You can guess why. If you understand the rules, zakah is not payable because although in the beginning of the zakah year, this individual possessed wealth in excess of the nisab rate, at the end of the zakah year, they possessed wealth in excess of the nisab rate. But during the course of the year, the 1st of Safar 1442, there was a zero balance. There was no wealth. Everything was lost. And as a result, zakah year is broken. If you understand the rule correctly, basically the zakah year will recommence on the 1st of Rabiul Thani 1442, which is the third last bar on your right from your right side, and it will we'll look now assess the situation on the 1st of Rabiul Thani 1443 now the next year. So this is very much what I have to say in terms of determining a zakah assessment date. I now want to move on to the zakatable assets. In the next slide, I will have to move a bit more swiftly, and I'll try to do so. In the next slide, I'm just going to list the zakatable assets without going into too much detail, and I'll unpack them as necessary, inshallah. The question from the brother Muhammad Rida, the final scenario is one which would not happen frequently. Yes, you are on point. Well spotted there. Zakah it's very rare that these kind of situations are encountered. There was another question earlier on. Final scenario is one which would not happen frequently, right? You mentioned that if a person's wealth anyway in the year goes below nisab, their zakah year restarts. But what's the difference between that and where a person's wealth goes down in the year but doesn't go to zero? He still has to do zakah. Correct. So in this particular scenario, you're looking at this slide here. This slide here. Because the year, this individual's year has always been every year. 1440, 1439, going backwards every year. It was the 1st of Shaban. So here's a case where we're looking at 1441 and 1442. So in this case, the individual possessed surplus amount at the beginning as well as the end. During the year, there was a volatility, and as a result, the wealth was below the Nisab rate. But in this case, the Zakah is still payable simply because in the beginning and end, this individual still retained their Zakah assessment date. It's not so to say lost. I hope that responds to the question, and we'll provide further clarity inshallah. For now, I'm just concerned about time and the number of slides we'll get to ensure a comprehensive experience. So, zakatable assets. We're looking at cash, we're looking at receivables, any amount that you're expecting to receive from debtors. Gold and silver is obviously zakatable in any form. Stock in trade is zakatable. Investment in zakatable assets is zakatable. Agricultural produce and livestock. I've added asterisks on these two simply because I will not be going into too much detail. And this is simply because it's intricate and it applies to a very small number of individuals. As a result, I won't go into too much detail. Okay, so let's commence with cash. Zakah is payable on all cash assets in one's ownership. The cash is cash for purchasing of a motor vehicle, cash for purchasing a home one day, but no commitments have been made. It's just a pure reserve of cash to be subject to Zakah. Saved rental income, if you have a property where you accruing rental, say in a year you receive rent, but 30,000 was used to upgrade the property, only 30,000 rand, which is saved, would be subject to Zakah. The saved portion of investment dividends, if you're getting any dividends from an investment, only the saved portion, and not the spent, only the saved portion, not the gross amount of dividends received, would be subject to Zakah. The capital portion of conventional fixed deposit or any other non-approved Sharia, non-Sharia approved product. So here we're talking about a situation where an individual lodged funds in a conventional fixed deposit account, which is accruing interest, and that interest that is being accrued is not subject to Zakah. It's only the capital portion that was contributed towards the fixed deposit, which would need to be subject to Zakah. Then Zakah is due on petty cash at home. Never forget to include that cash, which is their purse or wallet, needs to be subjected to Zakah because it is in one's possession or on that Zakah assessment day. As well as savings in bank accounts. I hope this is a given that any saving in a bank account would be subject to Zakah, whether the account is local or abroad or offshore. Zakah is payable on all currencies in one's possession. Forex, one has the option of calculating 2.5% or whatever Forex is in one's possession and paying it from the actual Forex. So if you have say dollars, you calculate 2.5%, you put it away in dollars, the 2.5 equivalent. Or use the spot rate as at the date of your Zakah assessment date. Use that rate to determine the rand equivalent of the forex position and calculate 5% of the rand equivalent. In terms of rewards programs, I'm not going to put my neck on the line in terms of Zakah rewards programs. And I say this simply because in our experience and from the volume of queries we receive on rewards programs, there are so many, each one is different. We cannot have a universal rule that applies to all rewards programs. Therefore, I implore our participants to contact us individually with whatever rewards programs are of concern, and we can try to address those. Indeed, time will never be enough to cover all the rewards programs that are these days. I personally speak for myself, I don't have enough place in the wallet to keep those rewards program cards. That's how many rewards programs we have currently circulating. In terms of receivables, we're looking at loans. Zakah is payable on loans in each year. As an individual, if you lend that money, you loan that amount out, you have the option to either pay annually. So whatever, as long as you have not written off the debt, you know that the individual is going to be paying, and it's expected. Then Zakah would need to be paid on the loaned amount annually. Or if the individual is in a situation where you're not sure, you have the stipulation that there's some chance this person may not pay. In this case, an option would be to maybe wait till the amount is settled, and then if settled, repay for the past years that Zakah was outstanding. In terms of credit sales, where you sold something on credit and amounts are due, Zakaah is payable each year of the outstanding payments from trade stock. Whatever that balance is that individuals owe, it would need to be subjected to Zakaah. It's a cash equivalent in accounting parlance. Accrued income is basically income that has been, it's earned, but it's not yet received by you as an individual. So you supply that to a friend or neighbor or someone else, some baked produce, home industry, and the income is due, but it's just not paid. It's a debtor essentially, and we need to be subjected to Zakaah. In terms of gold, gold in any form is zakatable from a Shafi point of view. If gold jewelry is purchased solely with the intention of wearing and usage, then it is exempt from Zakaah, according to the current view held by our Shafi desk. However, from a Hanafi point of view, gold in any form is Zakaah, whether it's a gold bar or gold coin or gold jewelry or gold utensil also, Zakaah would be payable. In terms of jewelry, I made it easier for our women folk. These are three questions. Under jewelry, you see three questions. The first is it gold? Second question is, what's the carat value? Because the carat value in rand terms is fluctuating on a day-to-day basis. And we calculate this from where we find it is on a day-to-day basis. And the third question is, how many grams do you have? So we're looking at 14, 18, 21, 22, and 24. 9 carat is exempt from here because our current research shows that because less than 50% of a 9 carat item is gold, the item is in the eyes of the Sharia law is viewed as non-gold. It's as if 100% is alloy metal, and as a result, it's exempt from Zakaah. So we're only looking at 14 and above. Then you need to look at how many grams you have. Here's an example. Basically, please don't take these values as current. But if an individual just 30 grams of 22 karat gold. Essentially, what we're doing is we're determining the current rate of 22 karat, which is 584.52. This is not today's rate, that's size. We're looking at 22 karat rate multiplied by 30 grams. That's 17,535 rand. Gives us a rough estimate of what this is worth. May not be the value getting the 17,535 multiplied by 2.5%. Then we arrive at the Zakaah payable cents. You do the same for silver. You acquire the rate for silver currently, you multiply by the number of grams, you arrive at the approximate market value, and you multiply that by 2.5%. In terms of Zakaah on gold coins, whether the coins are Kruger coins, they will need to be subjected to Zakaah. We broke. I think our internet connectivity was wavering there and buffering, so I may have lost you. Sorry for that. But basically, the content is on the slide in terms of the example of how to calculate Zakaah. I'll just continue with the aspect of Zakaah gold coins in the sense that I hope you can hear me now, Darul. This should be Moana. So, Zakaah gold coins, Kruger coins are Zakaatable at the current market value, which is made available on a regular basis by the Jamiatul of South Africa as well as Radio Islam International. Zakaah on Mandela coins is also due. However, Zakaah is not due based on the market value of the coin, face value of the coin. Zakaah is due based on the gold content. So if you've got an ounce coin, you'll have to consider the price of an ounce of gold. If it's half an ounce, you'll have to consider the price of half an ounce of gold to subject the Mandela coin or medallion to Zakaah. I hope that the transmission is a bit clearer now, and to all our participants. In terms of stock in trade, this is a list. We're looking at deposits and petty cash. There is sitting in the bank account, petty cash register, which is subjected to Zakaah, trade receivables, loan receivables. So trade receivables is goods and merchandise that was sold and expected payment. Loan receivables, if we loaned out money to anyone, that would be subjected to Zakaah. Packaging material would need to be subjected to Zakaah. Raw material as well. Raw material, I would say that you need to be using, because it's really not, in most cases that I encounter, individuals state that calculating Zakaah on the value of raw material why we say your best recourse will be the cost price to calculate Zakaah. If I may elaborate in terms of raw material, these fuqahas relate. If the raw if the material is the finished product, let's say in a home industry, an item like salt would not be subject to Zakaah because salt may make or break in the finished product, but it's not visible in the finished product, and as a result, would not be subject to Zakaah. I hope that the transmission is clearer now. In terms of, there's a request to repeat the rule in terms of Zakaah on raw material. I'll do so, inshallah. Zakaah on raw material is applicable. Firstly, I said that the cost price should be used if there's no other value that can be arrived. In terms of the raw material, the fuqaha and classical jurists have stated that if the raw material is visible in the finished product, then the raw material would need to be subjected to Zakaah. It's mandatory to subject that raw material to Zakaah. However, if the raw material is not visible in the finished product, then Zakaah would not be payable on that raw material inventory. So the example I gave was that of salt versus maybe say some decoration of the home industry, within that home industry business. The salt, although it's a make or break in the finished product, but would not need to be subject to Zakaah, whereas the decorative material would need to be utilized, would need to be subjected to Zakaah simply because it is visible in the finished product. Any stock on hand would need to be subjected to Zakaah. Yeah, elaborate in terms of stock on hand. Zakaah stock on hand should be paid using the retail price, excluding VAT. Obviously not at cost price. Our current view is that, and I'm not aware of any dissenting view within the South African context, that some other value should be used for Zakaah or stock in trade. It is the retail price that needs to be considered for Zakaah purposes on any stock intended for resale purposes. Obviously excluding VAT. As you as the vendor are you're just a conduit for VAT. And the VAT reserves are basically owable to the tax authorities. If goods do not have a retail price, and this is something we encounter in many wholesale businesses, so the price is relatively a relatively certain market value cannot be arrived. Then any other proxy can be used to determine the current value of the goods and Zakaah paid on those goods. In terms of goods in progress, these also need to be subjected to Zakaah. In essence, what we're doing is we value the goods in progress based on the stage of progress. If 70% of the goods are produced, then 70% of the retail value would need to be subjected to Zakaah. In terms of Zakaah on lay-by goods, this depends on the characterization, the Sharia characterization of the lay-by transaction itself. What I mean by this is, if you as a retailer are intending or regard or characterize a lay-by as a sale to take place in the future when the final installment is paid, in that case, the goods are basically still yours as the retailer and it still forms part of stock in trade. And this is why the goods would need to be included. All lay-by goods or merchandise would have to be included in these accountable assets under the line item of stock in trade. If the funds lodged thus far would be regarded as a deductible simply because they may be potential to return that amount to the customer. The same applies to consignment goods. I just want to pause for a moment. Yeah, I see a hand up. Okay, I see a hand up. You know, based on the way this webinar is set up, you would need to put it into the chat because the functionality of your voice would not be is not enabled. So please utilize the chat function to communicate with us. There's one question here in terms of how is the retail price of the dead or defective stock determined. I'll come to that. In terms of dead stock, we're looking at the value in terms of what's it currently able to bring. The current market price is the retail price and the price that would need to be considered for Zakaah purposes. So dead stock is not exempt from Zakaah. It is subjected to Zakaah based on the current value of the dead stock. If there's any defective stock also needs to be subjected to Zakaah based on whatever value it is marked at. So dead and defective stock are subjected to Zakaah. In terms of raw materials, they also need to be subjected to Zakaah. I already mentioned earlier on the detail, and I won't repeat it simply because time is against us. There is a question that you need to add VAT to the total amount of Zakaah for gold and silver. This is another rule that I could have addressed at the outset in terms of the consistency principle. So what we mean by the consistency principle is that if we are exempting or deducting VAT from the retail price in terms of any other stock that is intended for resale, then the same needs to be applied to gold and silver. It's going to be exclusive of it. And this is why at the Jamiatul Ulama South Africa, when we produce those daily rates of the different carats of gold, we produce those rates exclusive of that to represent a more fair value of the gold in one's possession. In terms of stock in trade, intangibles that are not developed or sourced for trade, such as like copyrights, patents, trademarks, software, these are not zakatable assets or within the context of stock in trade. Property, plant and equipment is not subject to Zakaah. Capital goods, fixed assets are not subjected to Zakaah. Fixtures and fittings are not subjected to Zakaah. Any collateral that you've lodged with, maybe say someone who's granted a loan for your business, would not need to be subjected to Zakaah. And this is a classic example of the ownership and possession rule, which I touched on and addressed at the very outset, where collateral that you've lodged with someone who's granted a loan or creditor, then that collateral is, it may be your ownership, but it's not your possession. As a result, collateral does not need to be subjected to Zakaah. Unless for you as an individual who's lodged given some kind of permission for the collateral to be invested, then a different Sharia rule applies. In terms of bad debt need not be subjected to Zakaah as long as it is written off as bad debt. It's the creditor has basically given up hope of receiving. In that case, bad debt would need to be is exempt and need not be subject to Zakaah. In terms of investments, now we're moving on to an aspect of life which can get complicated and does not apply to all and sundry. But in terms of investments in listed equity, there's a misconception that Zakaah is only payable on growth per annum. This is not the case. Zakaah, for those of us who have familiarity with accounting, Zakaah is not an income statement concept. It's based on a balance sheet concept more than an income statement, although they are functions of each other. But Zakaah is not, it's basically based on the balance sheet concept. Whatever is in your possession, irrespective of how long it is, whatever is the value of it currently, that is the value that needs to be considered, not only the growth of the investment for the current year in which Zakaah is being paid. Non-Sharia approved shares, Zakaah is only payable on the capital investment. If anyone holds shares of this nature, Zakaah is not payable on the total value of the shares. It is only payable on the capital investment of those shares. In terms of investments in listed equity, if the individual has a buy and hold strategy, buying it for the long term, invested in some listed entity and it's for the long term, or the intention is for saving and rather to serve as a store of wealth, then Zakaah is not due on the full market value of the listed equity. Zakaah is only due on the underlying zakatable assets. And I've dedicated a slide to how Zakaah is calculated if an individual has a buy and hold trading strategy to listed equity. I will address the issue of property that is rented out and how it plays out in terms of Zakaah calculation, inshallah. I see this question coming forth. In terms of a listed equity that is held with an active trading strategy, Zakaah is due on the full value of the investment at market value. Active trading here means an investment with the sole intention to sell and capture short-term positive price fluctuation. So you're looking at the full value here. I now want to go on to the aspect of calculating Zakaah on listed equity in terms of how to assess those shares if they are held with a buy and hold strategy or the store of wealth strategy. This first one in this particular slide. I'll just go through it as quickly as possible. Time is against us. Step one, we're basically using the company's balance sheet to determine the value of underlying Zakaah assets after deducting liabilities on your Zakaah assessment date. Obviously, you wouldn't have financials for your particular date, but you would have to then use the last available financial statements. This basically means you're arriving at the net Zakaatable value. You're taking the assets, Zakaatable assets of the company, deducting Zakaatable particular liabilities of the company. You're arriving at the net Zakaatable value in step one. In step two, we're basically determining the shareholders' net Zakaatable value based on the number of shares held. And then I should have had a step three here, which is the multiplication by 2.5% to determine how much Zakaah is payable. So here's step one. The company's net Zakaatable value after we deducted liability which we are allowed to deduct, we arrive at 10 million rand. The issued shares of the company are 100,000 rand. And in step two, we as an individual shareholder, we have 10,000 shares, which is 10% of the total issued shares. In this case, the Zakaah is payable as follows. We're looking at 10 million rand, which is the net Zakaatable assets of the company, multiplied by 10% of shareholding, which we have, multiplied by 2.5%, and to arrive at our Zakaah that is payable. There is a question here that would the buy and hold strategy principle apply to unit trust investments as well? Here it depends on the nature of the unit trust. If the unit trust is, I'm not entirely familiar with unit trust, I have a basic level of familiarity with unit trust, but if it's purely property, then we advise on using the same strategy. Or rather, sorry, in the case of property, we look at only the saved dividends. If the unit trust is comprising of more than 50% of other shares, not only, or I would say more than 50% is not so much residential property or fixed property, immovable property, then we would apply this particular formula that has been that is suggested and provided. I hope that the response is somewhat adequate or addresses the aspect of Zakaah on unit trusts. I apologize for this. We just have a bit of a delay in the display of slides. So with regard to investments in property, there was a question earlier on. Here's the detail. If an individual holds residential property, their own residential property, there's obviously no Zakaah on the market value of that residential property. However, if the property is held with a buy to sell strategy, it's like stock in trade now. The individual sells properties. They're not an agent, they actually own multiple properties and are selling these properties. In that case, Zakaah is payable on the intended selling price, just as if an individual is selling any other ways, Zakaah would be payable on the selling price. If the individual is holding property for a buy-to-let, it's just property without rental, then only the saved portion of the rental income for the current Zakaah year would be subjected to Zakaah, not the gross amount of rental received that year. I hope that this response is adequate for the individual who asked about Zakaah on property. In terms of pension and provident or retirement annuities, This slide summarizes the position. If the pension, provident, or retirement annuity is purely occupational, it's purely as a result of employment, then the occupational pension, provident, or retirement annuity need not be subjected to zakah. If it is voluntary, then zakah would be payable annually of net realizable value. And this is simply because I addressed the rule earlier on at the very outset. We talked about deemed possession. This is now deemed possession, where the individual has voluntarily lodged sums or reserves of wealth into these avenues and cannot access it. As a result, the zakah will be payable. In the case where the third scenario is where we have an occupational fund, but zakah is payable once it's redeemed or voluntarily transferred to another employees. So once the individual redeems it, it may be a portion of cash. That portion of cash, if it's still in one's possession as at the zakah assessment date, then zakah will be payable. If it is spent, if it was received and already spent before the arrival of the zakah assessment date, then zakah is not payable on that cash portion. However, if it is transferred voluntarily to another employer, then the net realizable value would become zakatable simply because the individual enjoyed some level of access for a period of time, even momentarily, voluntarily chose to lodge it with another or the new employer. In this case, it will be regarded as deemed possession and will need to be subject to zakah. I see there's a question relating to a ruling required for preservation funds. In terms of preservation funds, according to my understanding, and I could be wrong here, subject to correction, preservation funds are by and large utilized when individuals move from pension towards a preservation. In terms of the Pension Fund Act, which stipulates that if the pension fund is surrendered, then only a third is accessible before 55, whereas the balance of 2/3 is mandatory to contribute towards a preservation fund. In terms of our current view of the preservation fund, because the law requires lodging it with the preservation fund, it would be that 2/3 would be exempt from zakah, would not need to be subject to zakah, simply because the law steps in to stipulate that you are bound to convert it to a preservation or transfer the funds to a preservation fund. There is a question which I prefer to handle a bit later because I gather we're running against time, and it is a relevant question, and I'll address the issue. The question is about zakah had been paid on an occupational pension fund. Look, the question basically boils down to an individual who paid zakah on an occupational pension fund, whereas it was not supposed to have been subjected to zakah. So the question is, can zakah already paid be deducted from future zakah? The short answer is no. This is simply because zakah cannot be adjusted, or an amount discharged in the past cannot be adjusted post-event. One cannot regard a past payment of zakah as on behalf of, or in view of a future payment. Future payment would have to be, if an individual wants to pay for the future, or prepays zakah, as they say in the balance, the individual would have to make an intention right now at the moment of discharge that this amount I'm giving away today is in view of future zakah, which is to become due. So that aspect is, I hope that responds to the question itself. There is another question that states that is zakah on retirement money, RAs, pensions, providents, reservations, etc., payable on the capital at the time when zakah is discharged or the growth? In this case, if the fund is voluntary, then zakah would be payable on the net realizable value. If these funds are not voluntary, they are as part of an occupational scheme in employment, then there's no need to subject these pension scheme or retirement plans to zakah. In terms of zakah on crypto, what I'm going to do here is I'm just going to summarize it by saying that instead of going to all of this detail, let me rather say this way, that my understanding of the particular scenarios and individuals that I'm encountering at our office is that by and large the South African public who are involved in crypto do not fully comprehend the nature of the investment. There are select few individuals who understand the type of investment that they are getting into when it comes to venturing into crypto. By and large, most individuals do it through an intermediary and hardly understand what the crypto involves. So with that in mind, I would say that if the cryptocurrency is held and the underlying asset represented by a crypto is a zakatable asset. Let's say it's a gold or it's the underlying asset is some investments on a stock market. Depending on the underlying asset, if that asset is normally subjected to zakat, then a crypto with that underlying asset would need to be subjected to zakat. However, if the crypto is held with any other intention, it's not with these intentions of the underlying asset, then we need to look at whether the investment is held, the crypto venture is held with the intention of speculating markets and so forth. In that case, zakah would be due based on the particular scenario or the particular type of crypto. So let me do this. In the interest of time, I do understand this is gaining traction. What I'll do is, if there are any questions on crypto, we'll come back to it because there are varying opinions based on the type of crypto, whether it's utility, whether it's asset-backed, whether it's a governance token. These all influence the final verdict. This is why I won't go into or labor on the particular detail unless there are particular questions. In terms of non-zakatable assets, if an individual has a surplus bond facility where they pump in as much as they can towards their bond, and they have no intention to withdraw that reserve, even though the rules of the access bond allows them to access that reserve. But the intention is to pay it off so that they rid themselves of the loan, or if it happens to have interest, they are free from it. In this case, the amounts, the surplus amounts lodged in that surplus bond need not be subject to zakah. Similarly, precious items not for resale. It can be how precious. It can be a valuable painting. It can be a stamp collection. It can be valuable money. But if it's not in circulation, it would not need to be subject to zakah. A personal residence of the individual, other immovable property of the individual, motor vehicles, even though maybe more than one, would not need to be subjected to zakah. Furniture is not subjected to zakah. Fixtures and fittings within the business setting are not subjected to zakah. Impermissible wealth, a person may have some reserve of interest money. It would need it is exempt from zakah and does not need to be subjected to zakah. And non-gold or imitation jewelry does not be subjected to zakah. As I mentioned earlier, on collateral lodged with maybe a landlord need not be subjected to zakah simply because it may be owned but not possessed by the individual who lodged that collateral. So this is roughly a list of non-zakatable assets. I now want to move on to the current liabilities. In terms of current liabilities, accrued expenses which are in the accounting parlance, incurred expenses but not yet paid, these need to be deducted or can be deducted from zakatable assets. Obviously, the individual wants to exercise caution and not deduct these. They are free to refrain from any deduction and then pay the maximum amount of zakat. So accrued expenses can be deducted. Any account that is in arrears, the simple fact that it is in arrears means that the full amount is payable as at the zakat assessment date and can be deducted. Personal or casual loans, as they call it, between relatives, father, mothers, or whoever gave the personal loan, that personal loan can be deducted in full from one's zakatable assets. Legally prescribed debt. This is one that's gaining a bit of traction, and I have a bit of exposure to it, and more queries mounting in this regard. In terms of the letter of the law, if a creditor did not pursue a debtor for a period of 3 years, and the debtor can prove it, then the debtor can basically raise a defense in a court of law that the debt is prescribed and the creditor has no recourse to the debt. Now, from an Islamic perspective, if you place a Muslim person in the shoes of this debtor here, and 3 years lapse without the creditor pursuing, that Muslim debtor cannot raise a defense that the debt is prescribed. From a Sharia perspective, legally prescribed debt doesn't apply. The individual debtor owes that amount. If they become of means later on in life, they would have to settle that debt. And as a result, legally prescribed debt, if it applies to any individual, can be deducted as a liability. It should be deducted if it applies to an individual. Unpaid zakah of past years. Sometimes individual have 5, 6 years, maybe 10 years or more of unpaid zakah. In this case, we have a designated formula at our office to calculate the zakah of past years, but we deduct the due of the past years, because if those amounts were to be discharged timelessly, they would not have been in one's possession. So they are deductible from one's asset base. That's payable in full within 12 months. If any amount is payable in full within the next 12 months, that zakah would need to be, or that they can be a deductible of that full amount which is payable within the next 12 months. In terms of long-term debt, if an individual is repaying residential property, a loan on residential property, or motor vehicle finance, then the fuqaha have stipulated that it is not the total amount of long-term debt that can be deducted. This is simply because we come back to the rule of what is in the best interest of the poor. If the full or the total amount is deducted, a number of years may pass where the individual does not pay zakah. To avoid this, the fuqaha apply the consistency rule and say that just as the asset side we apply the annual concept, in the same way we apply it to the liability side, and only 12 months of installments can be considered. I put in brackets here principal only because from a Sharia perspective, the interest component of the repayment, if it's a conventional finance transaction, the interest component is not recognized as a legitimate liability. Just as interest is not recognized on the asset side to be paid, for zakah to be paid on it, the interest component cannot be regarded as a valid liability. Yes, an individual would need to visit that amortization schedule and only consider the principal portion multiplied by 12 if conventional finance applies to an individual. In terms of short-term expenses for current months, these can be deducted. If you have rent for the current month, telephone bill, school, madrasa fees, maybe university fees for the current semester in which your zakah assessment date falls, these can all be deducted from one's asset base. The next slide relates to valid recipients of zakah. I may skim through this and go through it very swiftly just to highlight and place on record that the recipients are mentioned in the Quran. But I'll go through the aspect, the forthcoming slides in terms of what generally applies in our scenario. There is a question relating to the current slide we are on, current liabilities. The question says, if, for example, I deduct the casual loan payable from wealth, should the receiver include the same amount in his wealth? The precise reason is that you've deducted it, which means that you've not paid zakat. So someone has to bear the zakat. And as a result, the receiver of this amount would need to be paying zakat based on being a debtor. So the amount in this particular scenario, on the receiver's side, the person who granted the loan casually, that person would regard it as a debtor and would include the zakat, the line item on the asset side of calculation of zakat. For the creditor's purposes, it would be a deductible simply because the full amount is payable and due on one's wealth. I hope that response to that takes care of the question. This slide basically deals with the recipients as mentioned in the Quran. We're looking at a faqir, someone who has some wealth but insufficient for their everyday needs, a masakin who possesses no wealth at all, the amilin, a zakah collected designated by an Islamic state, mu'allafatul qulub, potential new Muslims who are given zakat to encourage entry into Islam. This particular category is abrogated as per the consensus of the companions of Nabi sallallahu alaihi wasallam. Riqab are slaves who can be freed if we ever see a day, and we hope we don't see a day of slaves. But if slaves do apply, then this is a category to receive zakah. Gharimin is those who are indebted, over indebted. The liabilities far exceed the assets. Fi sabilillah constitutes those individuals who may be on Hajj or engaging in war in the path of Allah subhanahu wa ta'ala, or pursuing a path of learning in the modern context. Ibn Sabil it refers to a stranded traveler without access to personal wealth. This basically captures the recipients of Zakah as mentioned in the Quran by Allah subhanahu wa ta'ala. What I'll do now is go on to the next slide, which tends to relate to our ordinary day-to-day calculation of or identification of valid recipients. So a non-valid recipient is a masjid. Zakah cannot be given to a masjid simply because it is not a natural person. Zakah cannot be given to a non-Muslim. And this is because there are a sufficient amount of Muslims who qualify for Zakah. And this may be an emotional topic, but bear in mind that Zakah is not the only obligation of the wealth. There are other forms of charity that can be given to non-Muslims, but not Zakah. Zakah cannot be given to a deceased estate. As I mentioned, the deceased estate does not constitute a natural person to receive Zakah, and Zakah cannot be given to a deceased estate. The Sharia has other mechanisms to deal with an estate that is insolvent. One cannot give Zakah to a spouse, one's own spouse, in terms of the Hanafi view. Similarly, a wealthy person cannot qualify as a recipient of Zakah. From a Hanafi point of view, a person is not allowed to discharge their Zakah to an ascendant, their father, mother, grandmother upwards. Descendants, similarly, within the Hanafi madhab cannot receive Zakah. So a person cannot discharge their Zakah to their children, grandchildren, and onwards. I must add here that the same rule applies to individual relationships. So if an individual is considering Zakah to their father-in-law or mother-in-law or son-in-law or daughter-in-law, it would be permissible and allowed even with the Hanafi madhab. It may come as a surprise to you why we mentioned Sayyid and Banu Hashim, but this, although it applies very rarely, it does apply. So if you do intend giving Zakah to an individual, make sure that they are not Sayyid, and any individual who can authentically prove that they are a relative of Fatima radiallahu ta'ala anha, that individual would not qualify as a recipient of Zakah. And similarly, if they are from the Banu Hashim, if they can authentically prove that they are relatives of Sayyidina Ali radiallahu anhu, Ja'far radiallahu anhu, Aqil radiallahu anhu, Abbas radiallahu anhu, and Harith ibn Abdul Muttalib radiallahu anhu, then they cannot qualify for Zakah. I won't labor on it too much. If it applies to anyone or you're speculating someone may be a worthy recipient, may potentially be a Sayyid or Hashim, then contact us and we can address it further, inshallah. There is more detail to be provided. In terms of identifying a worthy recipient, according to the Hanafi school, the eligibility formula for any recipient of Zakah is as follows. You basically need to look for cash. You need to look for gold, silver, zakatable assets in any voluntary investments. Let's say they took out some endowment policy which they can surrender. It census looking for them or granting them Zakah, whereas they have a voluntary investment which could come to their aid. Stock in trade, you need to look for assets which are above basic necessity, and these assets which are above basic necessity exceed the nisab rate. So this is on the asset side of an individual that you're trying to consider for or as a recipient of Zakah. Then you need to deduct their liabilities. If after deducting their liabilities, they are below the nisab threshold, they would automatically qualify as a recipient. So I hope that by giving this formula, there is a guide for anyone that be independently on your own without the aid of an organization. You need to look for cash, gold, silver, zakatable assets in investments, stock in trade, assets above basic necessity, and then deduct liabilities. If after the deduction they are below the nisab threshold, they will be eligible for Zakah. There's no need to pry into personal affairs. It's a matter of discretion. If you use your discretion and someone appears to be worthy as a recipient based on what meets the eye, it is perfectly fine to give the individual Zakah. So some level of caution, but no need to pry into personal affairs. There is a question of whether Zakah can be given to siblings. Yes, Zakah can be given to a sibling if the sibling qualifies for Zakah according to the criteria. There's no need to disclose the status of it. If an individual is giving Zakah and you give it in the name of a gift or any other name, it's fine, it's good. Obviously, we encourage people to consider giving Zakah to relatives before giving anywhere else. We've now come to the end in terms of miscellaneous aspects. We should endeavor to discharge Zakaah personally. As far as possible, if we can avoid giving it to an organization. It's a fulfilling exercise, and I'm sure that within our own individual family circle or social circle, we can identify individuals who qualify as recipients, and Zakaah should be given personally. Prepayment of Zakaah is allowed if you have wealth, accountable wealth, upon which Zakaah is due. Zakaah can be paid. However, it is integral to ensure that this intention coupled with that discharge. Prepayment, keep in mind, on the second bullet here, prepayment does not absolve the individual of carrying out the annual calculation. So there will still need to be an annual calculation. And if the prepayment sufficiently covers the annual assessment, well and good. If it doesn't cover, then the balance needs to be made up for. Zakaah can be discharged monthly, but an intention is integral. One needs to intend Zakaah. A person cannot discharge Zakaah monthly or an amount monthly, and then at the end of the year say that whatever I discharged in the past months was my Zakaah. It would need to be, the intention would need to be coupled with a discharge in each month. Section 18A certificates can be claimed, they are permissible. It does not constitute Zakaah coming back to the individual. It simply means that the individual is taxed on a lower base, and hence Section 18A certificates can be utilized. There's a question here which states that if, say, I have 1,000 to pay as Zakaah, is it okay to give one person 1,000 or pay 110 people? Very good question. In broad strokes, Zakaah, when discharging Zakaah to an individual, one should try to refrain from giving so much Zakaah to an individual that would obligate Zakaah on the individual. So a person gives so much Zakaah which is equivalent to perform Hajj. That amount of Zakaah will be makruh to discharge to an individual. However, if an individual's need is far exceeding the nisab rate, then by all means, that any amount of Zakaah can be given to which would suffice for their need. But this is now a needs analysis, a needs test to base the nisab on, or the discharge of Zakaah. The question here is, what happens if the prepayments are more than the final calculation? Good question. If they are more than the final calculation, then the surplus amount is regarded as an act of charity for which an individual will be rewarded and will not go unnoticed in the court of Allah subhanahu wa ta'ala. Zakaah, in my last point, Zakaah can be paid in cash or in kind, but I implore individuals and participants to ensure that you try and keep the best interest of the poor in mind. If the poor require food, but we are giving them shoes, we may be ticking the box in terms of discharging our Zakaah, but there's an ethical question there and a question mark in terms of whether we've actually fulfilled our responsibility of paying Zakaah. This is once again the details for calculating, for contacting us with your questions. If there are any questions, then please feel free to send them to us. We will try to assist as best as possible, inshallah. We've not reached the end. Just bear with us for a minute or two, inshallah. We need to send out, or we need our participants to at least try to fill out a feedback form regarding the webinar itself. You can be as honest as you want. The email has now been sent to our participants. If you can please view your inbox and go through the feedback form so that we can try to improve our service offering in future, inshallah. I see there's a message. Shukran for your time. Allah reward you. I mean, Jazakallah khair, but please ensure that you fulfill the feedback form for our benefit. We will consider the aspect of sharing the slides. We will notify all our participants accordingly, inshallah. I will now hand over to Maulana Zain Komala, our MC for the evening, to wrap up and make a final dua, inshallah.
Jazakumullahu khairan for that presentation and fulfilling those questions, Mufti Muhammad. May Allah subhanahu wa ta'ala accept your services for the upliftment of deen and grant you the health and strength to continue serving Deen Islam. To our participant, this webinar would not have been a success without you. And on behalf of the Jamiatul Ulama South Africa, I would like to thank you for your valuable time and participation. We hope to have you on board in future programs and events of similar nature. Please bear in mind that a webinar of this duration cannot address all possible scenarios. Therefore, I appeal to you to contact any one of our 5 in-house muftis, either telephonically on 011-373-8000 or via email on ifta@islamsa.org. With this, I sign off, asking Allah subhanahu wa ta'ala to accept this humble effort. Fi amanillah. Until next time, Assalamu alaikum wa rahmatullahi wa barakatuh.